Happy New Year! Can you guys believe it? We've closed out 2021. Happy 2022. I hope you've all enjoyed your holidays and New Year celebrations with your friends and your families. Or if you just stayed at home this year because things got a little crazy out there, that's okay too. Anyways, the annual report for 2021 is out. Today, we're going to go over what to expect in 2022, the year in review of 2021, and what actions to take if you're planning on buying or selling a home this year. Stay tuned. The annual report is next. Hello, everybody. Thanks again for joining me today and welcome back. I'm Gary Massa with Massa & Associates here at EXP, and we are now about to go over the 2021 annual report, the first market report of 2022. I hope you're as excited about the new year as I am. So let's jump right into it. Today, we're going to go over what to expect in 2022, especially quarter one, because that's where I think the biggest change from years past is going to happen. The year in review, the hottest markets from year to year, and the hottest markets over the last 5 years, and what actions to take if you're planning on buying or selling this coming year. So let's just jump into it right now. Okay, so first off, we are going to talk about what to expect in 2022. Now, I think the biggest changes are going to come in 2021. The biggest things are inventory and interest rates. That's right. If you've been paying attention or watching the news, you've probably heard that the Fed has decided and been very clear that they're going to be raising interest rates this year, starting in March, right around the end of the first quarter, and 2 additional times later on in the year to try to help curb inflation. So what typically happens, we're going to go over what typically happens when the rates go up, the behavioral patterns, and why we're starting to see some shifts. Okay, so first of all, let's talk about inventory. As you can see right here, this is the seasonal listing patterns that's happened pretty much since this is back to 2012. All of these lines represent May, okay? 5th month of the year. Basically, our bigger season goes from in terms of listing and sales, our peak season goes from maybe March, April, all the way through July, kind of May. You can see in here where most of the most listings are happening around that second quarter, May, maybe June, et cetera, et cetera. You can see the pattern. Everybody is asking, where is the inventory? Realistically, you'll see in some of the next segment of December, we're right now in North County, San Diego, about a half a month of inventory total, half a month of inventory across the board right here in North County, San Diego. So that is very, very, very low. Everyone's looking for it. When is it coming is the biggest question. So typically it's coming in that May, June, time frame, spring season. But what's happening, and you can see quarter one, it starts to ramp up, but there's not typically very many listings in quarter one. What we believe actually, and the economists that I've subscribed to make a very, very good point. When do most listings come on the market? Like we just said, typically in quarter two, but when are they going to come on this year? We believe that they're going to come on mostly in quarter one of 2022. Now, according to Realtor.com, there's the amount of people that plan to list in the next 6 months. They did a huge survey. A lot of those people plan to list in the next 6 months are people who are planning on listing this year. So first half of the year, 65% have already listed, or 19% of those plan to list in the wintertime for the first couple of months. Now, 93% of those surveyed have already taken steps towards listing their home, and they've already secured, 28% of those have already secured an agent. 36% of those have researched the value of their homes and others in their neighborhood and started getting decluttering, started getting their homes ready to list. So the inventory is coming, and let me explain to you why. And this has to do with interest rates. We're going to be getting into that segment. But the point is because there's, in some zip codes, there's seriously zero homes on the market right now. That's a great opportunity for a seller to enter the market, have no competition, and with all of the demand and the overbidding, get the best price for their home. Okay, so sorry buyers, right now, slim pickings. And again, with the demand is pushing those prices up much higher. So if you're a buyer, good news, there's more listings coming to the market, but sellers, now again, let's talk about interest rates going up in quarter two in the end of March. Again, pretty much what the Fed has indicated, right? So typical patterns in the past, a lot of people, you'll start to see buyer behavior right now because the Fed has announced it. A lot of buyers are hitting the market thinking we need to get a home secured before the interest rates go up, because the fact is, even if you pay more for a home now, you're still going to have a lower payment than if you have you pay less for the home and actually have a higher rate. If you have a question about your specific situation in terms of price point, what the rates are going to do, let me know and we can have one of our loan officers run that scenario for you. However, getting back to what happens in the buyer behavior, it tends to compress a lot of buyers to the market to get in before that happens. So we all believe that there are a lot of sellers are going to be hitting the market before that happens, because again, if it does, possibility rates go up, stalls the market a little bit. This is the thought process. If it stalls the market a little bit, they'd rather get that higher price and capture that very anxious buyer right before the prices or rates go up, which starts to, could curb the actual price point in sales. So again, we see a lot more people coming on the market now to get in ahead of that, because that is the unknown. So let's talk about mortgage interest rate projections for just a second before buyer behavior, okay? Or what the behavior is going to be. So first off, Freddie, now this information comes from Keeping Current Matters. It's not my information or my research, just to be clear on this, but the economists that were surveyed were Freddie Mac, Fannie Mae, Mortgage Bankers Association, and NAR. Those are the big boys that have all the data basically in the United States, and this is national data. But basically, the average of all four believe that in quarter one, 2022, the average interest rate is going to be going up to about 3.3%. Right now, if you recall, we're hovering right around 3%. Give or take, somewhere in the twos, depending on the loan, etc. Quarter two, it's expected to get up to almost 3.5%, 3.43, 3.55 in quarter three, and then 3.7% in quarter four. Will it go there? Hard to exactly say, but those are what the projections are. Now, a lot of people are like, oh my God, the market's going to stall. We're going to have less sales, and the purchase prices are going to go down if rates go up. Now, what happened at the end of 2018 when they started increasing rates? They stopped the quantitative easing. Rates started going up. If you remember correctly, it did stall out the market. Okay, that was a fact. It actually happened when they dropped rates in 2019. Started this big crazy buying behavior. Now, I don't know if you can see this. I'm going to try to blow it up a little bit. This is number of sales, or actually home sales, that was not necessarily impacted by rates. Okay, so you can see, let's just skip the 90s, but really quickly, you can see from 90s through 2005, rates had been going up, and rates have been going up. Sales numbers has been going up as well. Then rates started coming down towards 2005. Sales still started going up. Okay, now again, if you remember, there was free money being given away at that point in time, which caused our 2008 to 12, right, the mortgage crash. But again, rates then came back down in like 2010, 11, this is probably 2012. Rates were at 3.66. They started going up, but so did sales. They came down again. Sales continued to go up. And this is about 2014 to 18. Rates were still going up, and so were sales, if you guys can see that. And then they came back down again. This is 2020, and the number of sales just skyrocketed for different, for kind of different reasons. But, interest rates had come down in 2019. And you can see when they came down in 19, there was like actually the slight lull in sales from 18 to 19. And then 20, it just took off. So looking at the next slide, home prices impacted by slightly rising mortgage rates. Now, again, this was during the mortgage meltdown, so we're not really going to pay attention to that really quick. But as you can see, that home prices, when prices went down, the prices actually went back up as rates were coming back up, coming out of the mortgage meltdown in 2008 to 12. And then you can see rates were kind of like bouncing around. As they came down a little bit, prices came down just a little bit. And then as they were going back up, you can see the tick up, and that's probably 2017, tick up in prices Prices came down 17 and 18 as the mortgage rates started coming back down again. And then in 20, prices jumped again, cheaper money, as well as less inventory, et cetera, et cetera. But again, home prices have not been significantly impacted based on the data during the times when rates have started to tick up slightly. And we're thinking about, we're expecting, based on this slide of the projections, that maybe there's about a 0.5 to a full percent of increase in rates. Okay, so point being, before we get into the year in review, summarizing all of that information is just that if you are thinking about buying a home, it's probably better to get in before the rates go up, because it's not like realistically home prices are going to go down and soften. Most likely they're going to stay the same, if not continue to go up because of our limited inventory, as well as you're just going to have a higher payment because of that higher interest rate. So please talk to your mortgage, your loan officer. Ideally, you'll be able to get a scenario of what that looks like both before and after if the rates go up. Now, let's get into the year in review, 2022, and the hottest markets. We're just going to kind of fly right through it. New listings, we had 18,000, almost 19,000 or 18,500 new listings hit the market in San Diego County. Again, this is a 4-year trend of less and less listings hitting the market, to the tune of 10% down from 19 to 20, and from 20 to 21, another 10% lower listings. Closed sales, you're noticing the closed sales have gone up. We had just over 17,000 closed sales in 2021. Now, again, that's a 2% increase from 2020. 2020 had a 4% increase from the year before. So again, this has also been a 4-year trend of upward movement in terms of closed sales. Median price point has gone up this year. The overall San Diego County median price point is $812,000. That's a 20% increase from last year. Again, a huge jump from 19 to 20. It was almost 9%, basically 9% increase. And every other year, it was like 1%, very modest increases in the previous years before that. So going to the next slide, inventory of homes for sale, a 4-year trend of actually like less and less inventory. I drew the line here of where COVID hit between 19 and 2020. We had about 1,000 less homes hit the market, 40% less in 2020. We had 60% or 59, a little over 59% less homes on the market in 2021 than we did in 2020. That's significant. That's 60% less than the year before. You can see the 4-year trend. Average sales price, again, is up 25%. That's $1,089,000, the average sales price in San Diego County. That's 25% increase from the year before. You can see it's been 7% from 17 to 18. 18 to 19 was 1%. 19 to 20 was 11%. Now we're at 25%. So that's huge. Days on market is cut in half. 29 days on market from last year, 16 days on market this year. And again, that's still a 3-year trend of declining days on market. Percent of original list price received, that's a big one we've been talking about all year, is the overbid. So it's at 103% for the entire county. That's huge. So 3% more sellers are getting than their list price on average this year. Whereas every other year, it's been basically pretty modest, between a 1% difference between that 97 to 98% variance of list price. So here's a very interesting slide as well, is that we've noticed this is the sales per segment, and you're seeing the $250,000 or less. That segment over the last year has been being cleaned out. There's only 235 sales in that segment this year. You also notice 250 to 500. That segment for the last 3 years is depleting just as quickly. There's only 2,000 sales in that segment. Now, you're also seeing the 500 to 750. A lot of these were transferring into the next segment the last couple of years. Now you're seeing a deficit, and I believe we're going to be starting a trend over the next couple of years as well. More homes are moving out of this 5 to 750 segment and into the 750 to $1 million segment. As you can see, over the last 3 years, that trend has been going up, up, up. 1,000 units from 2020 to 21 is added to that segment. Now, when you look at the million or more, 3 years as well of trends going upward in that particular segment. But look at the difference from 2020 to 2021. 2,100 more homes sold in that segment. There was only 1,000 from 19 to 20. And so that doubled in 2021. There's all this momentum coming out of these other two segments and pushing it right back into the million plus, meaning that, again, San Diego County is becoming less and less affordable. And more likely, if you're looking for a home here in San Diego County, on average, it's going to be over $1 million. That's basically what that's telling us. Going into the distressed home review. Now, again, I do hear clients from time to time saying, I'm going to wait until the market settles down or comes down before I buy again. Data is telling us that's really not, there's nothing that's showing us that that's a possibility at this point. But I also hear quite often people say that they want to wait or they want to look for a foreclosure or a short sale or a distressed property. The fact is they're out there, but not as prevalent as, most people thought. We thought that, coming out of COVID, we would see a ton of foreclosures, a ton of, possible short sales or distressed properties. Now, a lot of those numbers have actually changed. And if you're looking for some more data on that, I have it on a different webinar I can share with you. But the point is that a lot of that distressed sale is actually, coming back and turning their situations around and getting caught up. Now, the distressed market only makes up, last year in 2020, 1.4% of the market. This year in 2021, it was 1.6% of the market, and that's pretty flat. Now in 2017, it was 1.8%. That actually makes up more percentage of the market than it does over the last 3 years. So we're pretty steady in terms of distressed home sales. This is not 2008 or through 12, ladies and gentlemen. This is in our market, with the way that prices have gone up and inventory levels, there's not many distressed sales. The interesting thing that I wanted to point out is that the average sale of the foreclosed homes that are selling here in San Diego County this year was 1.3 million. So if you're waiting to look for a foreclosure, I hope you're in the luxury market waiting for that foreclosure, because that's where those homes are selling at, not necessarily down in this $250,000 range. It's just not happening anymore. Short sales, that's the segment of the market. The average sales price is $480,000. So thought that those are some interesting numbers that I wanted to share with you guys. Now we're getting to the top performers of the year. And there's 4. I tried to pick the top 3, but there is a tie for number 1. Okay, without further ado, the top performers of 2021 from year to year, as well as the last 5 years, meaning the equity and appreciation gain over the last 5 years and their percentages. You guys are going to be blown away. Are you ready? The number 1 spot came in for Rancho Santa Fe, 92067. Year over year, from 20 to 21, they were 32.8% increase in their median sales price. 5 years, they've gained 61% equity on their home in the last 5 years. That's over 10% per year. That's like 12% per year in the last 5 years, right? The median price point of that is $3.6 million right there, the 92067 of Rancho Santa Fe. Tying with Rancho Santa Fe is Carmel Valley, the 92130 zip code. Year over year, they were at 33.1% increase in median price point. Again, that's 33% in 1 year that they've made. And their average price point, just to skip ahead, is 1.6, or their median price point is $1.6 million. They gained 33%. That's huge. Okay, same thing with Rancho Santa Fe. They gained 32%, and their price point is $3.6 million. Doing the math, that's a huge gain in just 1 year. Their 5 year is also 61.6% gain in the last 5 years, about 12% gain during that same time frame. So Encinitas 92024 is coming in at number 2, really, because there was a tie between Rancho Santa Fe and Carmel Valley. But I must have missed their numbers. Darn it. I'm going to go over it really quick because I know where to find it, just so I can fill you in. Encinitas, they had a 25% increase year over year. And over the last 5 years, they've gained 58% in value. And their median price point is 1.5, just over $1.5 million median price point for Encinitas. Coming in at number 3, or have listed here as number 4, with Carlsbad 92008. Their year over year is 31.3%. But their what's it called? Their 5 years coming in at 57%, 57.6% over the last 5 years, and their median price point is $1.3 million. So the things to take away from this, actions to take. Okay, if you are considering buying or selling in the next year, or I'd even say 2 years, consider doing it much sooner than later. Okay. If you're not thinking of selling or buying, that's it. Just, you can probably tune out here. It doesn't really matter. Sit put and just enjoy the equity that you're gaining in your home. But if you're looking to buy, you should be looking to buy, my own professional opinion, in the first quarter of this year before rates go up. Again, as I mentioned, even if you pay more for the home now, the way that the trajectory of the market, even if you soften it up to a 10% increase over the next year instead of 30 or 40 or 50%, you're still going to be making a lot more money in the long run by buying now, as well as your payment is going to be much less, even if it was equal in 6 months from now, from having, equal price point versus a higher mortgage interest rate. So ask your loan officer to run you the scenario so you can make the educated decision. But the second thing, in terms of selling your home, again, sellers, first of all, the market needs your inventory. Secondly, again, to make sure that you can take advantage of buyers that are going to be cramming the market over the next few months to buy before the interest rates go up, I anticipate the behavior is going to be a lot more aggressive than we've seen over the last 12 months in 2021. So that's all. I know that this was a very long video. I think we're getting close to 20 minutes here. But again, thank you so much for staying tuned for this long. If you have any questions about your specific situation, please click below, drop me a note, message me, or give me a call. I'd love to talk with you, and I'd love to hear your input on this information. Happy 2022. I look forward to seeing you very soon.